I'm going to do a quick market wrap and just look at a couple of markets here. The first one is the NASDAQ. I made it no secret that I think we're in the final euphoria phase of this bull market. Pretty much all bull markets end in some kind of euphoria phase. If the central bank has kept interest rates too low for too long, printed too much money, it usually tends to end in a bubble somewhere. And I think the bubble this time is going to be in the Nasdaq stocks, same as it was in 2000. So my thought right now, anyway, is that this gap right here is going to be a breakaway gap. This looks like an intermediate decline to me. I think this is going to be a breakaway gap, and I think it's going to be signaling the start of the next phase of the bubble. I think we're going to shift gears, and this this was actually pretty steady rise higher, but I think this breakaway gap is going to signal that the bubble phase is going to start to accelerate, and we're going to get probably a much steeper rate of climb over the next, well, bubbles usually tend to last about a year and a half. My thought was that this began on election night, so we're not even a year into it yet. So possibly a top maybe in March, similar to how we topped in 2000. But I don't think we're at a top yet. And in my last chart of the day, I noted that the Nasdaq is only stretched 29% above the 200-week moving average, and at the bubble top in 2000, it was stretched 156% above the 200-week moving average. So you can see we've got plenty of room to the upside. And you know, we've just, if I'm correct, and this is an intermediate decline, then we're just starting a new intermediate cycle. They don't usually top, well, right translated cycles don't top until sometime after week 15, so we're only on week 2, so we should have lots of time yet. I would imagine that we're going to make it into Christmas, and if we are moving into the final bubble phase, and we're going to hit that $10,000 to $20,000 mark that I'm expecting, then I think we'll go through December, and we may not top until sometime in the spring or even early summer of next year. Next is the energy market. We've got a change in character here. I think this is going to mark the yearly cycle low. We now have a pattern of higher highs and higher lows. So we've got a one wave up here. We've come down. This correction held above this low, so a higher low, and now we've broken out to a higher high. That's different than any of these other rallies. So I'm fairly confident that this was a yearly cycle low, and and I don't believe the 3-year cycle in the CRB is going to be left translated. I think we're moving into an inflation, not a deflation. So an intermediate cycle, you know, even if it was a bear market rally, which I don't think this one's going to be, but even if it was a bear market rally, they tend to last 2 to 3 months before topping. So, you know, even if this was destined to roll over in a left translated manner and make a lower low, you know, we probably still got till sometime in early September, maybe even to mid-September before I would expect this to top. And if this is going to be a right translated cycle, then it could last, you know, up to 4 months before topping. So my thought all along has been that we're probably going to test this $60, $62 level right in here. This area right in here. and my feeling is that energy is probably just stuck in a trading range, say between $40 on the downside and $60 on the upside, and it may be in that trading range for a long time. Not sure that we're going to go back up to the $100 level anytime soon, although we could if the dollar enters a really severe bear market, then all commodities could get pushed up extremely high. But barring that, I tend to think that oil is just probably stuck between 40 and 60 for probably for several years. And then the next market's the dollar. We came within a whisker of tagging this 38% retracement. This is of the entire 3-year cycle. So this was a potential spot for this long intermediate decline, which looks like it's probably now going to be a yearly cycle decline. Potential spot for this to bottom. So I got out of my long positions in gold yesterday, just in case this turns out to be a spot for the dollar to finally end this decline and then give us some kind of a bounce. I still feel that the dollar has probably started a bear market, and so any bounce here I don't think is going to make new highs. I think it'll top somewhere up here, maybe right in this 100 level here, these prior two peaks, and then I think we roll over and we head down again. But anyway, potential spot for a yearly cycle low to occur. If this does not hold and we continue down later in the week or next week, then the next potential spot for a bottom would be this 200-week moving average. But just to be safe, I took off my longs in gold just in case this does turn out to be the support level that does end this multi-month decline and produces the bounce that is now way overdue. And finally, gold. So I'm not doing anything with gold at the moment. It's kind of a bifurcated market. Some of the mining stocks are looking pretty good. They look like they've bottomed, putting in bases. Gold, I do have a problem in that the dollar is making lower lows, but gold is not making higher highs as the dollar tries to complete its yearly cycle low. So I'm concerned that as the dollar rallies, and even if it's going to be a bear market rally, it should still last 4 to 8 weeks. I'm concerned that gold is not in a position of strength to resist that, and as the dollar rallies, gold could continue this intermediate decline and come down, and I don't think it's going to break this low, but it could test it. My triangle trend line that I've shown in several charts of the day and videos is somewhere around this 1180 level. So if the dollar rallies for 4 to 6 weeks, maybe this could turn out to be a top of this daily cycle, and then gold could grudgingly move lower and maybe tag that 1180-ish level that I was kind of looking for over the next 4 to 6 weeks. So I'm not in a big hurry to do anything with the metals right at the moment until I determine whether or not the dollar has found an intermediate bottom, and then how gold is going to respond as the dollar rallies. So just kind of sitting on the sidelines in the metals at the moment.